The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Once more into the breach, dear friends, do we go? As always, we like to meet here at this time.
The following takes place between p.m. and 3 p.m.
So what do we have going on today? Well, we're off 3 points in the S&P cash. We got down to being off about 10 points, but for the most part, it's a options digestion month. And my guess is that, at least from what I'm seeing right now, we'll take a look at it tonight when I get all my data and get a chance to look at it. But it looks to me like a fairly benign and sideways market into Friday's close for expiration. Options would point to a little bit higher. The problem has been that we just do not have enough short interest to drive markets as an overall level higher. Individual stocks, yeah, you can get a nice bounce out of them like Netflix. But for the most part, shorts are very concentrated in a very handful of names. For the most part, 5 or 6 different names. Everybody short those. The rest, very light short interest. And why, when we move up, we no longer have a lot of volume. That's changed a meme that's been out there for several years, and that is everybody got short. They got squeezed out. We had a lot of volume on the way up as those shorts covered. Now every move up is pretty much covered instantly. There is not that many more people to squeeze out of the market higher. Again, a handful of stocks. You see a lot of movements in them. We'll talk about American Express today, another one where, you know, the news on the thing, everybody was expecting the absolute worst. The news cycle had been horrible on it. So you had a lot of people on the wrong side of that one. But just not a lot happening out here to make people really think anything's going on. We've just got over 2 billion shares on the New York Stock Exchange tape. So this will be yet another move into the 2140 area and a push to 2147 today so far with very light volume. So for all the yelling and screaming of a market that can only go higher, we've got a market that certainly is at best range bound and at worst building steam to blow out the bottom, which is the way I'm looking at it. If we go higher, I'll probably be a little wrong. If we go lower, I'll be hugely right. And that's all you can ask for as a trader, is to set it up. I always think about the Daytona 500, and it's kind of a very strange race in the fact that a lot of luck comes into who's going to win. But you want, for a number of years, you wanted to be second or third in line coming to the finish line to have a chance of winning it. And everybody would say the same thing. That is, I just want to be there on the last 1 or 2 laps with a chance. Even a chance didn't guarantee it. Even the best car didn't guarantee a win. There was a lot of luck, but a lot of luck had to be with you being in third with that last 2 or 3 laps to go. And that's kind of what stock markets are. You've got to be there in the right position. You won't always be right if you do this thing right. In fact, you may only be right half the time. The key, of course, is to be very wrong, very little. I mean, take small losses and take huge payouts to the upside. And people that can win as few as 10% make monster amounts of money. As one of the gentlemen in the den, who I do not remember his name, once said, I trade a lot less now, and I had to learn to keep all that extra money and things to spend on. In the meantime, as I said, not a lot of volume. Options would suggest higher for the indexes, but unfortunately, with such a light volume, I would not be playing that just because it is very problematic that there aren't a lot of shorts to squeeze. Secondarily, the dollar index. I've had some charts, was it yesterday or today? I can't remember, in the newsletters, and talked about the triple top in the dollar. My thought is that we are much more likely to go test the 100 level than to fail here. 98.24 as we speak today. Got to 98.40 on the continuous contract for the dollar. That continues on. Kind of had a blow off of the TLT today. It got to 133.75. It's at 133.09. My guess is this thing's going to now wind up more energy finally to get back here and blow out the bottom down to 128. But we shall see. Anyway, 2141 on the S&P cash volume, just over 2 billion shares. So a little better, but not great volume. A lot of noise in the news about markets. In fact, I was laughing my rear end off. I woke up about 5:30 this morning and got ready to go walk the dogs. And the first thing I did was flip on my phone. And there was a thing. Markets winner in presidential election. And I thought, okay, so we must be up 30 points or down 30 points, right? Well, what are we? We're up 1 point in the S&P cash. And I'm trying to think, who in the world writes this stuff? Are they stupid or just liars? Combination of both. Anyway, lots of noise out here in the markets, very little truth. And for the most part, just no concept of what a real signal is. I bring this up every once in a while because it really opened my eyes to the way I traded. And that was a part out of Fooled by Randomness by Nassim Taleb. And he brought up back then in 2003 that a move of 100 points in the Dow compared to a 500-point move in the Dow is not 5 times as much. It's actually 9.6 times as much. Little signals don't mean much. Big signals mean a lot, and bigger signals mean even more. Every time someone looks at a half a point move in the S&P cash, it kind of drives me nuts. To me, it's very tough to figure out that these folks haven't really spent any time looking at signal to noise ratios and whether they're looking at a signal or whether they're looking at noise. I have to say that a great deal of what I'm seeing and hearing in the news is nothing but rattling noise from people that should know better and don't. Anyway, let's get this party started. And that always starts with this show with a little bit of history.
That it's all just a little bit of history repeating.
On this day in 1803, the U.S. Senate ratifies the Louisiana Purchase, under which the U.S. pays France less than 3 cents an acre for 828,000 square miles of territory. We'll talk about this and more. We got a lot of charts to look at today. An action-packed special edition, a very special Power Trading Hour.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Anyway, on this day in 1803, we acquired the Louisiana Purchase and all that area over there. In a stroke of a pen, the United States nearly doubles in size. The huge frontier of opportunity opens for its seasons. The U.S. finances the deal by borrowing $11.2 million in 6% bonds from European investors. What a deal! And of course, as they say, they're not making any more land these days. Certainly not any more waterfront land. And there's nothing but water in Louisiana, water and everything else. I always remember I went there in, oh boy, I'm going to say 1990 or 1992, something like that, for a convention. And whatever it was, they opened the door from the airplane. Didn't even have like a thing for you to walk into the airplane. Just you walked down to the tarmac and then walked into the building. But all I can remember is just the overwhelming smell of rotting vegetation. And I can't remember when this was. I think it was like March or something. And it's just really how hot and how humid it is there in Louisiana, and how much vegetation that they have. Everything is just always rotting. But nice town. Very interesting town. But I'd been there quite a few times before. But I'll always remember that one time. I was there in the 80s several times. Anyway, what else do we have going on in the markets? Not a whole lot. As we talked about yesterday, China's bonds, but that's just about it. We're going to get into charts rather early today, as we do kind of go sideways into it. Had one of our wonderful folks, Steve from South Carolina, wants to know about this show. It's down hard today, which is DXP Enterprises. They make a lot of pumps and industrial equipment that they lease and sell and service. This thing, a lot of times you want to look at these and say, okay, They did exactly what it should do. It took off with a huge sign of strength back on the 10th of July. Did so with 3.7 million shares. We're down today. It's gapped down on some news, and you're going to probably come back in here. But standard Wyckoff pattern. I don't like that when these gap down, but at the same time, I couldn't have been long this thing unless you were back in here at about $17.50 would be there with light volume, which you're probably going to get. Downside is these big gaps and volume increasing gives you a much more bigger tendency to go sideways for a while when you get down there than actually go through. But, normally I avoid these stocks as longs when they do gap down because you have to sit on them for a while as they consolidate back at their sign of strength. So all I can say is probably a good setup. Going to take a lot of patience to get there, though. Kind of going to be like your kids in back going, are we there yet? Are we there yet? Are we there yet? Anyway, we wanted to get to some of the other stocks, especially ones with earnings news. The train stocks had been acting very poorly. We talked about that last week. I didn't have enough clues out here to actually say that I was going to short any of these, but I didn't like the way that they were working and operating. Was it last week? I think it was last week, maybe 7-10 days ago. Earnings were coming up on most of these railroad stocks, so it didn't do anything. But the stock that gets the loser horn today is certainly Union Pacific. For a big stock like this, went above the previous high, did so on a little more volume, but couldn't hold that high of, October 9th of 2015. I would have probably pulled the trigger if this thing had gotten up to 105. There's a gap there. It didn't even make that, though. And here's where I would, one of the reasons we talked about these stocks that I was kind of bearish on the railroad sector out here, and that was that you had a lot of energy on the way back up, but man, this last leg from June 27th up to this October 5th, the energy compared to the January 21st low up to the March 18th high, man, you had a ton of energy, but in a much bigger move from that June 27th low to the October 5th high, you had half that energy, and then of course we were going into that high. Couldn't hold it, although it had slightly more volume, and now it's rolling over. Now you got three tiny little gaps back down to $82 and maybe $81.49, which is its June 27th low. But my guess is this thing is working its way back to so many of these double gaps that we've talked about. They're all over the market. In this case, this double gap goes to the 12th of February, and that would take you back to just a hair over $75. My guess is that as the market pulls back, we are more than likely going to see this thing pull back to that $75 level. If you wanted to get long, that is where you would want to put a pin in it to remember when it gets down there. If volume is low, you have it. Of course, volume starting off the high right now with high volume. So already starting to look rather bearish for this as we go down. Other stocks that I think are very interesting to be watching closely. I've never thought of selling Boeing short just because of the way that it does business. They lose sales, and those sales are 2-3 years out, and it seems like they get the sales back or someone new comes along. They've got a long pipeline of orders. The other thing that really has me thinking that Boeing isn't a great short is that 737 MAX plane coming out. If you're not familiar with it, it will be out next spring. But it is so efficient that many people are saying sub $100 tickets between between New York and London. And man, if someone would have told me that, I would have been, you could have knocked me over with a feather. That in this day and age that you could get prices on discount airlines to that level. They've got people lining up around the block to get that thing. And I think even if the market pulls back, will Boeing come back? It will. But, man, a huge pipeline of orders is always something good to keep your company going higher out here. You need something like a total disruption of fuel or something out here to really get me thinking that Boeing is a stock to short. I would not be going long. In fact, when I looked at this, if you were thinking about shorting Boeing, this is about as good as it gets. It could pull back to just over that 120 level, 121. But man, the market would probably have to really make me think that this was a decent short. I think you'd have to have a target on the S&P at 1900 before it really would pay. I think there's a lot better low-hanging fruit than Boeing out here. And as I say, Boeing, where I'm not going. Yes, I'm taking calls today. Did I get something? Oh, we got John in Philly. We'll get to him when we come back.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're going to go to John in Philly. How you doing today, John?
Hey, David. Thanks for taking the call. Dave, I've been very interested in your elaborations on your view of stock market opportunity, the upside versus risk of the downside, looking over, the near to intermediate term. And I'm wondering if the behavior of Tractor Supply Company stock might, in fact, be a model for what might be ahead for, say, the S&P, the NASDAQ 100, Facebook, Amazon, that sort of thing. And so I'm wondering your thoughts on that. And secondarily, now that Tractor Supply has fallen from 96, just back at Memorial Day, down to 64 here, I'm wondering if you think there's further downside to come before this stages, a corrective bounce.
I would say that at least from what I know about this company, because I've been in it and know a lot about it, that it would probably be an outlier to the rest of the market. Although I think your thesis is right, maybe the stock is not. And the reason why is Tractor Supply is not, for the most part, in big cities. It's in very small rural cities. It tends to literally have a ton of stuff that people need for farming and all the kind of outdoorsy stuff that people do. Think of a hardware store out in the boonies where you can get parts for your tractor and everything else. It doesn't tend to be the kind of Home Depot-like store, if you've ever been in one. Have you?
I have many times.
A Tractor Supply?
Yes.
Okay. So it's not kind of a Home Depot. It's kind of like a Home Depot for people out in the boonies.
Right.
Okay. So that would be my first thought, is that this tends to probably trade a lot more in the past when I've looked at it with how much money farmers have and how much money is out there in the rural areas. When things get tight in rural areas, this stock does poorly. When there's, when wheat and corn and everything else looks like it can't go any higher, this thing looks like, it trades kind of the same way. So it's kind of like a John Deere kind of thing. When the farmers have a lot of money, they buy a lot of tractors. I haven't looked at a great deal of it. What I would say on this is that the energy off the top is just horrifically huge. But it does go into another theme that I've talked about, that is that these stocks are all coming back to these little double gaps that they've had. In this case, you've got a double gap that goes back to the, September 9th of 2014. It goes a few months and then gaps back up right past that gap back into October 22nd. And I don't know what it is, but gaps sometimes get tested. But everything I'm looking at now has got these double gaps coming back where it gap down, it gap back up, and now they're headed all the way back down to these gap lowers, or in some cases gap highers. But anytime you see where there's a gap and then yet another gap over the top of it, seems to be a big attractor. I haven't seen this. I've gone back several years through it. Maybe it's just a phenomena lately, but that's it. Now, to your bigger theory that we could see some significant downside in the markets, I think it's all point by point. Amazon, my theory with Amazon is that it is headed lower because they're spending huge amounts of money. He bought 20 planes, then he bought yet another 20 planes, Bezos. And my thought is that a lot of people are going to think, okay, he's back to expanding the business. There's not going to be a lot of cash. And what are we going to do about that? Because, buying these planes, pretty expensive deal, right?
Mm-hmm.
So to me, it is, I suspect, well, there's a few things. One, I think there's a 90% chance that we get a quarter-point raise in December. Any standard economist at any big Wall Street firm would think that they know that right now that about 30% of the earnings are based on artificially low interest rates. If they went back to even some kind of normal 3 or 4%, that 30% would be gone. So my thought is that it depends on how fast the Fed acts out here, but we've got an artificial high out here based on rates that can't be sustainable. Now, maybe the Fed takes it off as light as they can and does it perfectly, but that would probably infer that we sit here at this level for the next 4 years while they pull that out. I don't think that it's kind of like playing Jingo. I don't think that they can pull all the brakes out without at least a few times having the tower fall.
David, I appreciate you sharing that informed skepticism.
There's going to be a few hiccups, right? And I suspect those could be fairly large. It just seems to me, like I said, there's very little upside. There's the potential for downside, but not the guarantee. But if I'm wrong, I suspect that we're going to have slightly higher prices. If I'm right, going to have significantly lower ones. But I think it's. Go ahead.
I'm sorry. I'm going to thank you for that response and sign off here and just ask one parting question before I do, and that is if you could share any features that you see on the NDX or S&P 500 index on gaps down below the market, the kind that you were referring to that you saw existing on Tractor Supply. So thanks a bunch. Keep up the good work. I appreciate it.
You bet. Not so much on the indexes, a lot on the individual stocks. So, we'll take a look at them again, but not so many. It's just I'm going through all these stocks every day, and I just see a lot of these double gaps that are coming back and acting as targets. And very, from what I can see and as I follow them up, seem to be a preponderance of them are going right back to those double gaps, whether they're higher or lower. So they are acting as attractors. In this case, maybe super attractors for price. 2141 on the S&P cash. Thanks, John, for the phone call. 2.2 billion shares as we kind of go sideways again. Options expiration tomorrow. Ideally, option market makers would like to push the markets a little higher. With rare exceptions, there just aren't enough people short this market to really push it much higher. We've pushed a couple of times into higher prices, did so with lighter volume. Does that mean we roll over instantly at the close today? No, but I could easily see us with a close back below 2140 again today, lighter volume. And, we've had that kind of lighter volume for a long time. My guess is that most traders in Wall Street will look at that dollar and go, you know what? I'm going to keep some powder dry here. That thing hits 100. Maybe we get a big enough pullback to actually do something. But in the meantime, it is problematic. And the dollar index at 98.30 as we speak. We'll get back into it, get into a few more stocks. Be like John, a great trader, by giving me a call at 877-927-6648, emailing me at path@tfnn.com, or posting a message in the den.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And thanks for all the wonderful email. Again, email me at path, P-A-T-H, at TFNN.com or call me at 877-927-6648. What do we have going on out here? A few stocks that I find very interesting. With the elections coming up, Diebold, who makes a lot of election machines down here at the Lowe's. Not exactly sure what's going on with Diebold, but you have to say that at least it's starting to look like maybe this thing is making some kind of low makers of ATMs. I do not like the energy off the top. This August 19th high at $29 down to today had much more strength than any real move since the move off the November 20th high. You do have light volume so far going into this February 11th low at 22.08. One that makes me think that maybe the market has, the car market has severely turned is this car auction company, KAR. They are auctioning off both trade-ins, but a great deal of cars that come back on repossessions. And this thing has done nothing but take a lunch off the bottom from the January 29th low at $30.85. It's done really nothing but go higher. Kind of pulled back just a little on May 4th and then gapped up on some very decent volume. Pretty much almost the best volume. But maybe he's just getting ready to pull back. Could be a little bit. This nice big gap would be the place to buy it. That'd be at about $36.75. So that another one there to keep an eye on, but had nice signs of strength, nice move up here. No real sign that the thing's going to fail, but kind of these errands, rents, car auction services, pay-as-you-go, car lots. Action at those can tell you that the stresses on the lower economic part of the U.S. Economy have already started. We've got a GDP of about, 1.3% predicted for next year. In reality, that we all know that the government or U.S. government rounds up on all those numbers. So I'm already assuming that we're in some level of recession. Oh, man, did I tell you? I forgot to even tell everybody. Last night I got into a small riot. Of course, everybody knows we're down here in Clearwater, Florida, and some people call it God's waiting room. Everybody, half the people are retired, and half the people are waiting for those Social Security checks. Well, yesterday they came out with the cola thing and said that, you know what, the average person was going to get $3.45 more in their Social Security this year. And I was driving through this thing, and it was like a Black Lives Matter riot with older folk last night, and I didn't know what to do. But I turned down another street and went around it. But very interesting. I probably wouldn't have known that they were getting such a small COLA rate increase. But then the only thing I could think of was, well, Janet Yellen says that that there's 2% inflation. How did these guys get 0.03% inflation for the rate of inflation, but only 2% over there at the Fed? Those two numbers don't line up. I thought it was interesting. I thought I'd stop and talk to them about it, but you know how these folks can get down here. They wouldn't want to rile up the elderly. Anyway, very interesting. I guess I'm almost elderly, aren't I? Yeah, getting there. Anybody older than you is old. That's what I figured out. LXRX. That's always been the word. Somebody in Dana in the Den brought up Diebold as the rigging the elections. The one thing that they finally did on these machines, they forced them to do, is it spits out a receipt, and you can take that receipt and verify that your vote was actually cast correctly. So that's kind of put the kibosh on those machines. But the whole idea that they never gave you a paper ticket that could be taken somewhere else to validate that original vote was something. But yeah, those voting machines ripe for fraud. I don't like early voting or mail-in votings. All those things can be set up as frauds. Lexicon Pharmaceuticals. I'm not a big fan of the IBB here, but I have to say that there are some stocks that if the market were to turn around, I would be looking very hard at this one. Beautiful Wyckoff pattern, a nice sign of strength on the 9th of September. Went up with almost 13 million shares, kind of played around here. It's come back to fill about 50% of the existing gap that's left. 1535, 1525 on this thing. Continued with very light volume. Looks very interesting. I am bearish on the overall market, but I am always more than willing to keep an eye out for these stocks. If something would change my long-term view, that I would flip on a dime and look at. Some of the other ones out here, the high flyers, Nike. This thing is headed a little bit lower. The thing that you have to really look at is this August 24th high down to this low from October 17th. Had huge amounts of energy, especially compared to the June 27th low back up to that August 27th high. So again, in my parlance, you come down with half the energy on a leg, you get light volume. What do? You probably get a V bottom. If you come down on more energy, what do you get? Consolidation. So to me, this is a nice sign, but you need a few weeks, you need a few bounces, and you need all the energy to bleed out of this before it finds a sideways lower action out here. And of course, this, I don't know, is it UA? Under Armour. Kind of interesting here, and this thing is just going sideways. I was thinking that maybe you'd get a little better sign out here. My thought is that if the market goes higher, this would be probably the one out of those two that I would pick up. I do like stocks that go sideways, especially after they've come off some highs, as a good sign of accumulation. Volume hasn't really expanded out here. It's been kind of nice and generally unexciting, and that's normally a fairly decent sign that you're getting some accumulation around this $38 level in Under Armour. I'm not a big fan of the retail trade out here. Ideally, I would get one more test of this gap because you have high volume on the June 1st low. So I probably wouldn't go long this one. You had 19 million shares on that June 1st low. That's probably going to get retested. The question is when. But it looks like you have accumulation in Under Armour. So if the market turned up significantly, I would have to say that maybe there's something to picking up Under Armour for a little higher prices. When we come back, we got a few more stocks to look at, some more email to go through, another action-packed, very special edition of the Power Trading Hour continues after the short intermission.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
I had a question in the den about what I think about crude, and I'll show the OIH out here and a couple of the other ETFs. I have a machine that I have my actual broker on that's separate from everything I use. So I don't have that up right now to show anybody, the actual crude contract. But the question is, what do I think about oil? I thought that the upside on oil, I think I said something to the people in the den, or somebody in the den on Friday or Thursday last week, but I thought gold and crude had very limited upside, although it had some. I thought maybe gold had a little better position out there because of one of the charts I saw. But other than that, both of them I thought had limited upside. Again, pressure is going to be on these things that are priced in dollars. And again, I think that at $100 on the dollar index, a lot of these trades make a lot more sense and are a lot more clear. I dislike that this latest big run is all based on a lot of kumbaya, we're going to have a group hug kind of stories where everybody's going to cut production. These things have always turned to dust in the past. I guess maybe this could be different, but for the most part, I can't see that. We did have a nice test in the OIH yesterday, and that was the June 8th high with 10 million shares, with just 7.4 million shares yesterday. Now, does that predict the end of the oil business? The answer is no. But for me, the idea that we're in a much bigger trading range from about $38 to about $50, and we're on the very high end, kind of blew that out a little bit. My guess is that we come back in it and we trade around that level for a while, especially with a stronger dollar. I'd need to see some kind of rejection of the dollar at $100 before I would start thinking about looking and playing crude at higher prices here. Does it instantly roll over? With Putin rolling his northern fleet through the between Europe and Great Britain today, it's hard for me to see that there isn't at least a little bit of premium. The other thing is that if someone wants to park their cash, and I think a lot of people do, crude's not a bad place to put it. You know you're going to eventually find somebody to take it off you. And my guess is that there's probably going to be a little bit of premium in crude for a while as the risk trade, as we didn't really see that much in let's take a quick look in the GLD with the last few minutes. As I said yesterday to one of the callers, I thought a better play out here would certainly be that you got just a little bit more downside out of here and maybe just a little bit more patience. You know, if you could get 116.50, 116.25, 117 on the GLD, I think that's probably where gold is coming back to. The energy on this pullback is light. I'm just thinking that maybe just a little bit more patience out here sets up a few more things like gold and crude. I'm just not looking for that much higher out here. You would need to get a pretty decent rejection off that $100 high in the dollar index. So hurry up and wait. At least my thought for the day. In the meantime, you can always do one thing. That is sell when you can, not when you have to. And I'll see you here for an action-packed expiration day tomorrow. Same bat channel, same bat time. Thanks to everybody. Tell a friend, tell two friends about the Power Trading Hour.
Larry Pesavento has just announced a special offer for subscribers to his trading service, Fibonacci 24/7. Right now, you can get a month of Larry's Fibonacci 24/7 while gaining access to his upcoming live webinar, The Pattern That H.M. Gartley Missed, taking place Wednesday, October 26th. This live workshop will be archived for subscribers if you cannot attend live. And if you order right now, we'll also send you a copy of Larry's book, A Trader's Guide to Financial Astrology. This book retails for $90, but we'll send it to you as part of this special offer that runs through the night of the workshop, Wednesday, October 26th. Sign up now and get a free copy of Larry's book, a month of his Fibonacci 24/7 trading service, and a live workshop on the pattern that H.M. Gartley missed. With a 30-day money-back guarantee, this is an offer that you can't let pass you by. Sign up today for Fibonacci 24/7 by visiting the front page of TFNN.com.
You're watching Tiger TV.